Well, good afternoon, everyone. I am Nicole Thornton, your coach and trainer for the Cole Realty Group Atlanta. Make sure that you are following me on Instagram at Your Real Estate Style Pro. And of course, we are continuing our series today with Chris from Jourdan Accounting. He's going to provide us with some additional nuggets on how to make sure that our businesses are operating effectively. And everyone, please make sure that you subscribe to our YouTube channel, TCRG Closing the Gap. All right, guys. Well, of course, we have 28 under contract at $9,793,207. Topping the charts is Charisma Mims with 5 under contract. Our very own coach and trainer, Naisha, at 4 under contract. Tamia's on her heels with 3. Nikisha, the Jamaican rock star, has 3 under contract. I've got 3. Sharice is coming in close at 2 under contract, along with Dina and Alicio, holding it down with 2. We've got Anetta with 1. Our Sharonda from our very own Florida with 1 under contract. Brandy has 1, and Sanika has 1. Okay, so for our current sales for the month of November from the 1st through the 24th, we have a total of $5,392,261 in sales. I don't know about y'all, but that's a nice start for November. We've got Naisha at 1,006,990. Deidre is up coming close to second at 746,000. I've got 2 at 648,000. Nikisha, 2 with 625. Chanel, 2 at 866,000. Brandy, 1 at 497,594. We've got Kiana at 2 with 342,000. Sharice has 1, 215,000. And then Charisma has 1 closed at 180,000. Okay, so the moment we all been waiting for, those Zillow numbers. Oh my goodness, the production is in. From the beginning of the year through November 24th, the Red Hunters have closed a total of $12,911,184. And then we've got the pros at $19,765,600 and something. I can't see those last 2 numbers on my screen. How? That's a total of $32,676,807. Guys, you should definitely give yourselves a round of applause because that is phenomenal. But it doesn't stop there. You know, we still got about 5 weeks left for the remainder of the year. We need a total of $17,323,193. And if it's any team that can do it, I know it's the pros and the hunters. So I can't wait to see what you guys accomplish for the remainder of the year. And congratulations again. All right, so the moment we've been waiting for. I know everybody has their pen and their paper ready because last week, woo, Lord, I was like, ooh, make sure I write that down. Got to get that. Got to get that. Got to give Chris a call because he gave us some very valuable information as real estate entrepreneurs to make sure that we set our business up, our real estate business effectively. I'm talking about all the way down from how we need to title our entities, how we need to file our taxes, all of that. But hey, that ain't my area. I'm going to stay in my lane. And Chris, I'm going to turn it over to you.
Hello, hello, hello. Good afternoon, everyone. Good afternoon. I hope everybody's having a great Wednesday. And I know especially that everybody's looking forward to tomorrow, to Turkey Day, because I already know that you're already thankful for everything that's been happening to you as entrepreneurs this year. And as we continue to deal with this COVID thing, and I'm sure everybody, you know, the thankfulness and gratefulness started long before the Thanksgiving season. So if you will, Josh, let's go ahead on to the first slide there so that we can do a quick review. Remember last week we talked about the 4 entities that you fall in one way or another, whether or not you set up anything with the Secretary of State or set your business up with the Secretary of State. In all actuality, you are still in business as an entrepreneur. The only thing is you're in business as a sole proprietorship or an independent contractor. Now, I'm sure that there were a lot of questions, and Last week was the quickest 60 minutes in a very, very long time that I've had to deal with. And I know it was a lot of information, but again, please, if you have any further questions, feel free to reach out to me and I'll give all my information out at the end of my little presentation today. So with that being said, outside of sole proprietorships, there are, of course, LLCs. Everybody hears about LLCs. Now, if you're an LLC is nothing more than a glorified sole proprietorship with some characteristics of a corporation. In all actuality, an LLC and general partnerships is one or more persons, unless you decide to be an LLC by yourself, and that's called the single party LLC. And as a single party LLC, you still have the protections, but you will be taxed as a sole proprietorship. However, general partnerships and limited liability companies are nothing more than partnerships. Now, with a partnership, I will always recommend have an operating agreement with your partner that says who is liable for what are our roles and responsibilities, because if you do not have that, your partner can bind you in contracts when it comes to liability. Best side is, if something was to go wrong and you and your partner were to be sued, of course, your liability is only at the contribution to the company, your capital contribution to the company. So there is some protection. However, as a sole proprietor or a single party LLC, there is no protection there for you. Now, a C Corp is a corporation that is an entity within itself. It is a complete entity within itself and is taxed separate from you personally. And whatever money you receive out of the C Corp, if you set that up, whatever monies that you take out for personal use, that will be considered a dividend, and you will be taxed at the capital gains rate. You don't have to take it all. You just take sparingly. That's how most business folks beat the tax game. They let the corporation pay the taxes, and they only pay themselves modestly that within the money that they take out of their corporations. All right, but again, if you have any questions whatsoever in reference to the four general business entities, please feel free to reach out to me and I will help get you through it. Now, these are the topics that we didn't necessarily get an opportunity to speak about last week. So I will go into them, and this is what we'll talk about this week. And it's just a continuation of last week. The first one, of course, is the PATH Act, the Protecting Americans from Tax Hike Act. That's an act that was passed in 2015, basically to help American entrepreneurs to avoid, if you will, large tax hike. And with that being said, a tax safe haven, if you will, was enacted called the Section 179 deduction. And as I told you last week, Section 179 deduction basically states in a nutshell that an entrepreneur can spend up to $179,000 on business assets and write those assets off up to $179,000 one time on the up to $179,000 on 1 year's tax return. And the only time you can take that deduction is at the purchase, the year that the business asset was purchased in. So if you decide to run out and purchase a vehicle between now and the end of the year, as long as it stays under $179,000, you can write that entire vehicle off. There was a couple of questions that came up with that, saying, well, what if I'm making payments on it? I didn't necessarily purchase it outright. Well, that's a caveat that will exclude you from Section 179 deduction. The asset has to be completely paid for. It cannot be financed in any way, shape, or form. It has to be paid for. But then another question came up about leased vehicles. And I will tell you this, that if you decide to lease a vehicle, there's no restrictions, because every dollar that you pay on that lease and repairs to that leased vehicle is 100% tax deductible. 100% tax deductible. Now, the question always comes up, well, is it better to lease or is it better to buy? The situation depends on you. What I would ask myself in the difference is in trying to figure out what's best, mileage. When you lease a vehicle, you only have a certain amount of miles that you can drive per year with that vehicle. If you think you're going to go outside of that mileage, I'll be the first person to say, do not get it. Do not lease the vehicle, because the mileage rate is higher. The per mile rate is higher than the tax deduction per mile rate of 58.5 cents for that vehicle if you go over your mileage rate. So in that case, if you're going to be driving 30, 40,000 miles in a year, given that you are real estate professionals, I would not recommend it. I would say buy outright if you have the money, buy it outright and write it off on your taxes, or buy it the traditional way by financing it. But so that's pretty much the nutshell in the PATH Act. But we went over last week, we went over a lot of deductions that a lot of times, not only real estate professionals, but small business entrepreneurs, they leave money on the table in the essence of paying higher taxes because their tax preparer, and I'm putting that in quotes, the tax preparer doesn't know all of the deductions that a real estate agent or a specific type of business owner may deduct for their tax purposes. So I'm going to go real quick through the list before we get into finding a great CPA. All right. Now, the list, of course, just about anything you spend money on as an entrepreneur, one way or another, can be deducted for the most part. I know we'll talk about clothes again, but that's a iffy subject. But in other words, there are other things that are very much 100% deductible. For example, meals. When you go out to eat, it is 100% deductible. 100% deductible, especially if you're taking a client out or you're talking business. You can always write that off. Licenses and dues are always 100% deductible. Any service fees you may pay, if you pay a monthly bank service fee, it is 100% deductible. Any education and training, 100% deductible. Let's see, insurance, medical insurance that you pay on your vehicle, even the insurance that you pay on your phone is deductible. Any transportation and automobile expenses, such as repairs, deductible. Car washes, deductible. Travel. Anytime you travel, anywhere you travel, 100% deductible. So when we talk about travel, the question always comes up, well, what if I just take a vacation? Well, a vacation, depending on where you go, may not necessarily be deductible, but it still can be deductible. You just have to make sure that you have your records in order to be able to show that. Let's say, for example, you decide to take a vacation to, let's say, Cabo St. Lucas, and you go for 7 days. If you go there and you take a tour of real estate, guess what? 100% deductible. 100% deductible. And a lot of times people say, well, it was a personal trip. Yeah, it was. But you did an act of business looking at real estate, 100% deductible. Now, is anybody going to, are your taxes going to be audited? Let's say that I don't like to use that word, but let's say, well, how the question is going to be asked. It's simple as this. If you have proof, you have your receipts from your travel and your itinerary of what you did while you was there, that will be all that you need. That will be all that you need. Okay, so travel is yes, ma'am.
Question on that. Okay, so what if you didn't necessarily tour real estate, but you hopped on a call or you did something that was
100% deductible? You still maintain business while you were traveling.
Okay.
Yeah, 100% deductible. 100% deductible. Again, meals, 100% deductible. Gifts. Now, gifts is a little tricky because it says only up to 100. It only says up to $25 deduction per client. I know we all spend a little bit more. However, instead of putting it in gifts, put it in as office supplies or miscellaneous, and you'll get away with it every time. Office rent and utilities. If you have a office, not your home office, but a brick and mortar office that you drive to work every day, 100% deductible. Rent, utilities, rental insurance, internet service, phone service, all of your office supplies, printing supplies, paper clips, you name it, folders, 100% deductible. All right. Sales tax. Sales tax are deductible. Not sales tax when you go and purchase goods at Walmart. Not those sales tax. However, if you pay sales taxes on a vehicle, 100% deductible. And of course, if you purchase homes for investment property or any property for investment purposes, of course, the property taxes are 100% deductible. Anytime you bring on help, even virtual help, 100% deductible. If you pay your cousin and he or she is over the age of 18 and they're helping you stay organized, 100% deductible. Downside is, if you pay that person over $600, a 1099 has to be given to that person so that they can include it on their taxes, and then it's deductible. If you decide not to give a 1099, then guess what? It's not deductible. Any business equipment that you choose to purchase, such as printers, computers, cell phones, all of that is deductible. Had a question in another seminar where someone said, well, what if I spend $2,000 on the phone? What if you spend $2,000 on the phone? It is 100% deductible, but at the same time, you need to take a financial course because that's a waste of money. They all do the same thing, but that's just my own opinion. Some people do it for a status purpose. Office supplies, as I said, all office supplies are deductible. Any software that you may need to purchase. I know sometimes as real estate agents, not sometimes, but you guys pay a monthly fee to so that you can view the particulars about property. Totally deductible. So legal and professional fees, 100% deductible. If you purchase real estate for investment purposes, property taxes are deductible. Property losses are deductible. Excavation, cleaning, all of those things are bona fide business expenses and 100% deductible. And I know a lot of people are thinking, wow, man, I probably left a lot of money on the table. So how can I avoid that, or how can I recoup that? There is no statute of limitations as far as time in preparing an amended return on a tax return that has already been processed. There is no time limit. However, let me say this, you have a 3-year window in order to collect any refundable money. So let's say we're in 2020 tax year right now. Well, it just ended in October, but let's just say, for instructional purposes, for 2020, let's go back to 2019. For 2019, you had a tax debt for whatever reason. The tax preparer didn't know what he was doing, so you had this large tax debt. You didn't quite pay it yet, but you've been paying on it. So you can very easily audit that return and do an amended return to add additional expenses that will lower your tax debt. Now, it's not going to process overnight. Since COVID, the IRS has been taking forever to process amended returns. It may take 4 to 6 months for them to process it. However, it is a process. It's not going to happen overnight. During the time that it's processing, continue to make your payments. And once the amended return is processed and the difference is calculated, if you are due a return, you will get that money. However, if you go back to 2017 or any years further, that money will go off the books. However, it's gone. So if you think you can do an amended return to lower a tax debt from 18, 19, or 20, feel free to do an amended return. Now that brings me to finding the best accountant or CPA. Now, I'll be the first to tell you, I'm not going to be the one to throw any accountant or any other CPAs under the bus. That's not what I do. However, we all basically do the same thing the same way. There's not a lot of difference in what we do. The only difference is how we provide you with a solution. I'm going to say that. Accounting and tax prep is all the same. The difference is how the solution is provided to you. Sometimes the solution may take several months. Some businesses may charge you a monthly retainer. Some companies may give you a flat fee. You have to find what is best for you. So how do you find the best CPA? I'll be the first to tell you that the internet is great. However, it doesn't help. You can research an accountant, look at their website. Everything can be stellar. However, if you can find reviews, especially from the Better Business Bureau, that's where the rubber will meet the road. Reviews and Yelp reviews. However, if you know someone that already has an accountant or a CPA, those referrals are usually your best bet. Why? Because if your friend that you trusts this accountant or CPA, then more than likely that trust will resonate with you if you're looking for a great CPA. I recommend interviewing an accountant or a CPA. Look at their credentials. Many people will say, yeah, I'm an accountant. Yes, I'm a tax preparer, but don't have a PTIN number, which is a preparer's tax ID number only issued by the IRS. If they say they're a CPA and they're not listed on the Georgia Board of Accountancy's website as a licensed CPA, then they're not a CPA. Even if their license has lapsed, it will still be there saying that it has lapsed. Now, as an accountant, what is the difference between a bookkeeper and an accountant? I'm going to give you the answer. And a bookkeeper basically does just that. Keep your books, and it's always after the fact. A bookkeeper will look at your bank statements, organize it, put it in a format where it can generate a financial statement, and that be it. An accountant, on the other hand, will not only do the same thing as a bookkeeper, but then they're going to analyze those financial statements and say, this is where you're going. This is, if we project out the rest of the year, and if your averages stay the same, this is what your tax debt is going to look like. This is what we're looking at overall. That is the difference. Now, a CPA basically is the same thing as an accountant, just licensed. And basically a CPA is used on the public side of accounting where there are publicly traded companies. They can certify financials. On the small entrepreneurial, small business side of things, if the business is not being traded publicly or is listed with the SEC, there's really not a large need for a CPA. You may have overkill even if a CPA accepts the business. So bookkeeper, accountant, or CPA. Bookkeeper is only going to get you so far. They may give you the great story. Yes, I do books and taxes at the same time. Okay, but if you're doing it all at the same time, where are your credentials? What's your education level? Well, I didn't go to college. Well, if you didn't go to college, are you certified by the IRS? No, I've just been doing taxes for a long time. If they haven't gone to the level of certification at a minimum with the IRS, run away, because they're not going to take responsibility if there's an error on that tax return. And a lot of times the easiest way to see if a preparer will take responsibility, look at some of their previous returns, of course, that has been redacted, and look at the second page. If their signature is on there with a business name, tax ID number, then you know they're in business with the IRS. They've been certified. However, if it says self-prepared, knowing that you didn't prepare it, they prepared it for you, get your documents back and find a better accountant or tax preparer. It's imperative, because if your return says self-employed, remember that you are 100% liable for any errors, omission, or misrepresentations of income or expenses that are listed on your tax return. So looking for the best CPA or accountant is imperative to the success of your business financially. Do we have any questions so far?
Not any so far.
All right. Now let's talk about staying organized. Let's say you don't really want to pay a bookkeeper or an accountant or a CPA through the year. You're going to try to do it yourself. I will be the first to tell you not to even try. Don't do it, because life is going to happen. Trust me, life will happen. You'll be tired. Everything under the sun. Murphy's Law is that whatever could happen usually does. Staying organized is most difficult. Think about it like this. There's a difference between working on your business and working your business. When you are out there selling homes, showing homes, doing your real estate thing, you are working your business. Doing the administrative stuff on the back end, such as bookkeeping, staying organized, keeping everything in order, sales and marketing, when you're trying to, bring in new clientele. That's the backside of working on the business. And a lot of times you cannot do both at the same time. Take it from Chris J. I've been doing business for 23 years, and I created this business thinking that I was doing something properly. After 23 years, I found that all I basically did was create a job. I was the end all be all, trying to do everything myself, realizing that, just realizing it in my older age, I should say, that I'm only one person. If something was to happen to me, my business is done. I'm only one person. I can only get so much done in one day. I've learned the hard way. The easiest thing to do is buy back my time at a discount by employing a team to do all the other stuff that I don't have time to do. All right? Trust me. Don't look at how much it costs all the time and say, I can't pay somebody $10 an hour. Think about it like this. If you have the opportunity and the time to focus on selling homes and the administrative work, such as keeping yourself organized, your books, your tax projections, all that stuff is being done by someone else, even if it's being done virtually. I promise you, you will reap the benefits in the long run. And freedom is the name of the game in entrepreneurship. Regardless of the industry, freedom to do what you love to do, and that's sell homes.
Okay, well, I have placed all of that information in the chat. Chris, we can't thank you enough. I mean,
hey, no problem. I enjoyed it.
This is valuable information, and I'm sure we'll have you back again.
Great.
To share.
I would love to do it.
Yes, awesome. Well, thank you again, Chris. And guys, thank you so much for joining TCRG Closing the Gap. We'll see you next week. Happy holidays.
Have a good weekend. Happy Thanksgiving.
Same to you, Chris. Bye.
Thank you. Bye-bye.